Hi, this is Manoj Phillip with ManojSellsHomes.com, and today we'll be talking about a powerful yet lesser known method of buying a house, getting money up front for repairs and improvements, and then creating instant equity. Let's go over it. Have you ever seen a home and thought to yourself, wow, this home has great potential and I love the neighborhood. It's close to my employer, it's close to my friends and family. The house has, a great yard. I love the layout of the house. It really has a lot of potential. I love how the basement's finished and the kitchen's really big and it has several bathrooms. But then you thought to yourself, but the home needs a lot of work. It needs a lot of upgrades to make it more modern. Maybe the house needs some structural items like a new roof or needs some plumbing upgrades. Or maybe the home just needs some cosmetic upgrades. Maybe the kitchen and the bathrooms are outdated and you really want to modernize them. Well, in the past, you would have two options. One is you would just ignore that house, skip it, and find something else. Or you would buy the house in its present condition and then spend the time and the money over the course of several years to repair the house. So whether you made the repairs on your own, spending every weekend for the next several years, or you hired a contractor or contractors to do the work, it still required you to save up money over the long term and spend a lot of time to get the repairs done. And a lot of people, they would just give up or they would never start, and they would have these grand plans and nothing would ever get done. Well, what if I told you there is a solution to avoid all of that headache? Well, there is. And we're going to go over an example and I'll explain how it works. Let's say you find a house that you really like and you feel the home has great potential. It's in a neighborhood you love and you really feel like it just needs a small amount of work or a large amount of work. It doesn't matter to get the home to where you want it to be. So in its present condition, the home is $100,000, meaning the sale price, let's say, is $100,000. The home has a hole in the roof, broken window, the gutter is falling off, and the downspout's crooked, and maybe a host of other issues inside. Well, in its present condition, the home is $100,000. That's the sale price. Then you bring in the contractors to give you an expert analysis on what it would take to get the home or make the home what you want it to be. So whether you want to just make structural and safety repairs, or maybe you want to add some cosmetic things like stainless steel appliances and granite countertops and things like that. And based on that analysis, it's going to take $40,000 or it's going to cost $40,000 to make the house what you want it to be. So the current price is $100,000 and it's going to take $40,000 to repair the house and improve it to the point that makes you happy. Well, in the past, again, you would have to buy the house and then spend the next several years saving up 40 grand, applying your tax returns and bonuses and all that stuff to make these repairs. But now with this mortgage solution, you get all that money up front. Okay, so here's how it works. You would get a mortgage for $140,000. So your total cost would be $140,000. Now, in real life, there's a down payment, so your actual mortgage would be this $140 minus your down payment. But for simplicity's sake, we're just gonna call it $140. Okay? So you buy the house for $100,000. So you give the seller $100,000 for their house. Then you add $40,000 for the repairs, so your total mortgage would be $140,000. Your total cost is $140,000. This is your mortgage that you pay off with interest over 30 years. Okay? So you get a mortgage for $140,000. So what this allows you to do is it allows the contractors to be paid up front so that way they can do the repairs up front. Okay, so instead of spending the next 5 or 10 years doing repairs, you get to hire the contractors and pay them to do the repairs today. So you can either move in to the home after the repairs are done, or you can live in the home while the repairs are being done, depending on the severity of the repairs. Okay, so you buy the house, the seller gets $100,000, and then you now have $40,000 to pay the contractors to fix the roof and the windows, to add granite countertops, to repaint the house, to add hardwood floors, whatever you want. Okay, so your total cost again is $140,000. But here's where the magic happens. Let's say that based on the neighborhood conditions, based on what homes are selling for, meaning the prices the homes are selling for, and the features that those homes have, and the features that you put into this house, based on all those things, let's say the home is now worth $160,000. Okay? So your total cost is $140,000, but the value of the home is now $160,000. Excuse me. So what happened? Well, you just created $20,000 of instant equity. So again, the purchase price of the house is $100,000. It needs $40,000 of repairs. So your total mortgage payment, your total mortgage is for $140,000. And again, for simplicity's sake, we're going to call it $140, even though it's technically less than that because you have a down payment. But the purchase price was $100,000. The total value of repairs are $40,000. So your total mortgage would be, in this simple example, your total mortgage would be $140,000. But because of the repairs you did and the neighborhood conditions, the value of the home is now $160,000. So you just created the difference. You just created instant equity of $20,000. So that means even though you put in $140,000, if you were to sell the house today, you could sell it for $160,000 and you can make a gross profit of $20,000. Now, you wouldn't actually pocket $20,000 because you would have to pay commissions or at the minimum transfer taxes and different expenses like that, closing costs. Even sellers have closing costs. Even if they don't hire a realtor to sell their home, they still have closing costs. But in this simple example, you would have a gross profit of $20,000. $20,000 of instant equity. Even if you didn't sell the home, you would still have $20,000 of instant equity. So again, you bought a house for $100,000, you got $40,000 up front for repairs up front. So your total cost, or your total mortgage is the $140,000, but now the value in this example is $160,000, and now you have just created instant equity of $20,000. Let me tell you, this mortgage solution is phenomenal. I've seen clients really go to town with this, and they bought some wonderful homes, and they put some great updates into it, and the homes are now worth considerably more than what their mortgage is, and they just love this product. So if you're curious as to what this product is, go ahead and drop a comment below, or just send me a message on Facebook or YouTube, or you can go to my website, menage-sells-homes.com, and you'll find multiple ways in which you can contact me. Okay? Thank you. Looking forward to talking to you again.